Hi, and welcome to Business and Wealth Strategy, where smart entrepreneurs build lasting wealth. I'm your host, Karen Newton, and in today's episode, we're diving into a popular but sometimes controversial property investment strategy, rent to rent. Now, if you've ever wanted to get started in property investing but felt locked out by high prices, mortgage requirements, rent to rent might sound like the perfect entry point. But like any strategy, it's got pros and cons. So today we're pulling back the curtain to look at the good, the bad, and what you really need to consider if this is the strategy you're thinking of using to build income. So grab a drink, get comfy, and let's get into it. What is rent to rent? Well, first, rent to rent is a property strategy where you lease a property from a landlord, often at discounted or guaranteed rate, and then you rent it out to someone else at a higher price. The difference between what you pay the landlord and what you collect from your tenants is the profit. There are two common types. Guaranteed rent agreements. This is where you guarantee the landlord a set monthly income, regardless of whether the property is fully occupied or not. It gives them peace of mind and gives you control over the property for that period. Then there's the management agreements. This is more like acting as a letting agent. You manage the property, collect the rent, take a fee for your work. There's less risk, but also less reward. It sounds simple, doesn't it? And it can be. But let's look at this a little bit further. Rent to rent has become popular because it offers low barriers to entry, that you're not buying the property, so there's no mortgage, no huge deposit, and often you can get started with just first month's rent and a security deposit. Quick cash flow. If you can fill the rooms and manage the property well, you can start earning straight away. It's scalable. You can build a portfolio of properties you control without owning any of them. Sounds like a dream, right? But let's take a deeper look. Let's start with the advantages. So, the first advantage is lower initial investment. Compared with buying a property where you have to put down a huge deposit, this strategy is far cheaper to start. There's no mortgages, no stamp duty. There may be some legal fees, but usually there's no legal fees. Now, your potential for cash flow. If you rent a property for say 1,000 a month, that's you rent it from the owner for 1,000 a month, and you rent the rooms out individually so that you bring in say 2,000 a month, you're potentially making 1,000 gross profit each month depending on your costs. Now it's flexible and offers speed. Rent to rent allows you to move quickly. You can take on a property and be up and running within weeks rather than months. It's scalable. Once you've done one deal successfully, it's easier to replicate and to scale. You can build a solid income portfolio faster than if you were buying property the traditional way. And look, it helps landlords too. There are many landlords who are hands off or live abroad. If you can offer them guaranteed rent, fewer voids, and full property management, they're happy to let you take the reins. But it's not all sunshine. Let's talk about the other side. And this is probably the part that people don't talk enough about. The first is you don't own the asset. And this is a big one because no matter how much time, energy, and money you put into the property, it's not yours. You won't benefit from long term capital appreciation or equity build-up. You're still responsible for maintenance. In most agreements, you're the one who takes care of the day-to-day maintenance and repairs, often out of your own pocket, and that eats into your profits. Legal and compliance headaches. Rent to rent is legal only if done properly. You need written permission from the owner to sublet. You need the right licenses, especially for HMOs. That's houses of multiple occupation. This is if you buy, say, if you rent a 5 bedroom house and then you're renting each of those bedrooms out. That is what an HMO is, and you have to have licenses to be able to do that. When you are doing an HMO, you need to comply with fire safety, with health standards, with tenancy laws, and there's more. And it's a lot. Void periods become your problem. If you've guaranteed rent to the landlord and can't fill the rooms, you're still paying them, even if the property is empty. So you need to be sure that you have enough people who want to rent a room in a property to make sure that you are covering void periods. Cash flow. Now, that can be pretty thin. Unless you manage the numbers carefully, the actual net profit can be far less than you hoped, especially if unexpected repairs or compliance upgrades are needed. And something else to consider is you're building someone else's equity. At the end of the contract, the landlord still owns the property, possibly improved and tenanted by your hard work. They can raise the rent, they can refuse to renew your contract, they can sell it, and you're left with nothing. So let's look at maybe some pros and cons, which are case studies. So let's say you're managing a 4 bedroom house. You're renting it from the landlord for $1,200 a month and renting out each room at $500 a month, giving you a total of $2,000. Your gross profit is $800. Now deduct the expenses which you are responsible for. That could be the utilities, the council tax, maintenance. You've probably got a cleaner in there. You've got internet, you've got furniture, licenses. There's a huge list. You may only end up with 100 or less from that. And if one room is empty for a month, that's your profit gone. The strategy works well, but only if you're disciplined, detailed orientated, and on top of every aspect of the deal. Now, that's an example of what could happen negatively on a rent to rent. But I have clients and some friends who have successfully implemented rent to rent. Now, one friend has several properties. She has round about 10 or 11 properties, and she is generating over 100,000 profit a year. Now, that's a net profit. That is what she takes out of it. Now, these houses, she's bought them, she's rented them from a landlord, converted them into HMOs, got her licenses for that, and then rented the properties out. But she has number crunched all the way. She has managed it and made sure that she's not running up a lot of expense in the management process. So I hope those two examples can show you that yes, there can be a downside to it, and yes, there can be a good side to it. Rent to rent isn't for everyone, but it can work well. It's good for people who have limited startup capital, those wanting to get experience in property before buying, people who enjoy property management, and entrepreneurs looking for cash flow over long-term ownership. But if your goal is to build wealth through asset ownership and appreciation, this might not be the strategy for you. If you're considering it, here are some key tips. Do your due diligence. Understand the market. Will you be able to fill the rooms? What are the average rents? Get everything in writing. Make sure the landlord agrees to subletting and that you're not violating mortgage terms or insurance. Keep reserves. Always have money set aside for repairs or voids. Treat it like a business. This isn't passive. You're essentially running a mini letting agency, so you need to be professional. And have an exit strategy. Know how you'll leave the deal or what happens if the property becomes unviable. Rent to rent is a real strategy. It's not a scam, and it's not a get rich quick scheme. It's a legitimate business model that can generate cash flow quickly, but only if you go in with your eyes open. You're trading ownership for cash flow. That's not necessarily a bad thing, but it is something to think about carefully. If you're in the early stages of your property journey, rent to rent can be a great stepping stone. Just remember, you're building income, not wealth. And at some point, if you want true financial freedom, you'll want to move from controlling assets to owning them. Thanks for joining me today on Business and Wealth Strategy. If you've enjoyed this episode, I'd love it if you subscribed, left a review, or shared it with someone else who's exploring property investments. Until next time, stay strategic, stay focused, and keep building